Welcome once again to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and it's been an interesting trading week, to say the least. We've had some highs that we saw in cattle. We had a WASDE report that didn't bring much surprise. We're going to break that down and everything in between on this week's episode, so stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again. As you can see, joining me is David Ericson and also JJ Lauby. And gentlemen, I'm excited for the opportunity to kind of talk to you and break down what we saw in these markets. And I want to start out, first of all, your biggest takeaway to what you saw this week in the market trade. And David, I'll start with you.
Yeah, I would say that the biggest takeaway that I had this week is the attention that the grains are paying attention to on the trade war front, on the trade war side of things. And, we've kind of been up and down the river as these trades have developed and maybe went away a little bit. And, I really think that the biggest thing that we are missing from a market perspective is, one, looking at our domestic weather. When you look at the drought monitor, and not that we're in severe drought in a lot of the Corn Belt, but we are definitely in some drought stages across a lot of the I states. I think that we are going to shift our attention to that here in the coming months, or here towards the end of the month, I should say, back half of the month. And then also the fact that the USDA dropped their world carryout number on the soybean side of things so much, and the market really isn't paying attention to that.
All right. What about for you, JJ?
My biggest takeaway of the week, I think, is the positive action in the cattle market. It just continues to make new highs. We've still got positive basis levels out there, and we finally broke cash. Fat cattle broke out today, selling at 206 and 325. That gives us, a $2.5, $3 basis still. The feeder cattle side of things, it's getting pretty crazy out there. But I think until and if we get this tariff thing figured out with Mexico and Canada, I really believe the feeders can keep on trucking.
Well, I want to start right there, since both of you kind of brought up a little tariff talk. Do we, or have we just paid too much attention to the tariff discussions, and we need to focus, David, somewhere else?
Well, I definitely think that the tariffs need to be paid attention to in some way, shape, or form, mostly because of the fact that, it is at the forefront, and, it is going to have some major impacts down the road, and even right now. So, it's definitely going to have a major impact on a lot of the markets that, JJ and I pay a lot of attention to in the commodity space. The biggest thing that I have a problem with is, it's all speculation right now. It is all, if this were to happen or if that were to happen. And I know some of them have went into place, and then they've, been talked about being increased or talked about being decreased. And there's just a lot of what ifs that go on. And then, we also have an administration that's telling us, hey, you got to see the forest through the trees. And, I understand his thinking overall that it's going to be a good thing, if they get it put into place and are implemented for the long term. But there's no promise that, at the end of his administration that they're going to be continued. So it's a really interesting time to be alive, and, we'll just have to see how the outcome is.
What about for you, JJ?
That's a good statement there. Interesting time to be alive. That's right. my dad was a cattle feeder, and he's been gone for 25 years, and I bet he's just rolling in his grave at these prices. It is something. Yeah, as far as the uncertainty in the markets, typically markets don't like uncertainty. We've seen that in the grains this week, with the exception of wheat. I do want to touch on wheat a little bit, especially hard red here. When we look at, the three all the way out 3 or 4 weeks from now, getting us to the first week of April, we're looking at above normal temps and below normal precip. There's a lot of wheat that hasn't quite come out of dormancy yet. I don't know how bad those cold snaps hit it. We haven't seen what the actual winter kill damage has been, but I certainly know that if this forecast holds true, it's gonna really show in the next couple of weeks.
Well, I know it has definitely been a big concern, and maybe the market's not fully, from a wheat perspective, paying attention to that. And that kind of leads then into the next. We have crop insurance that's due on Monday. There's still that acreage war discussion out there, gentlemen, of is it going to be more corn? Is it going to be less beans, or how's it all going to come together? What is both of your preliminary thoughts as we look at where we might see, for example, these corn acres sitting at? David?
I can. Yeah, sorry, I didn't know if you wanted me to start. I can definitely start. What I'll say, and maybe it's different where JJ is at. I get this question a lot when I talk to various different people about, how many acres are going to be shifted over or what have you. But I think that there's a little bit of a disconnect when you look at different social media and you talk to different analysts and whatever. And there's a little bit of disconnect between putting a pencil to something and, figuring out what pencil's better than, what you kind of already had planned for your operation. And some of that is, just people perhaps kind of get stuck in their ways over time, which, I'm guilty of. And, JJ, maybe you're guilty of it too. I'm not going to speak for you, but simply switching over from, corn to soybeans isn't as easy as, yep, I just want to go ahead and do it, because there's some planning that goes on ahead of that. And there's probably already some fertilizer out there or whatever, or you have the ground prepared accordingly. So I don't see any real big changes happening, but I definitely agree that the economics work out way better to plant corn right now, and I would be much more willing on my farm to plant it all the corn if that made sense, if that was workable. But then you create problems down the road as well. So I don't see any real big changes, but I'm just one person with one opinion.
So JJ, you're really in cattle feeding country there. So as you hear this corn acreage talk, is it possibly mean some cheaper feed headed the way for feeders?
We certainly hope so. Yeah, I kind of differ a little bit from David there. I really think we're going to we might even see 500,000 or 1 million more than what the last report said. We'll find out more in the prospective plannings report here at the end of the month. But one thing to keep in mind is, I'll just talk about my area specifically here. We had a tremendously short crop in the last 2 years. We've been short here. That's been represented in the basis levels. I know shortly after the first of the year, I think the elevators and ethanol plants kind of tried to rob some old crop corn, some guys that needed to price contracts and things. But we're starting to see that basis pick up, and especially with the board being down like this, I think there's tremendous basis risk for a cattle feeder out there right now. I think we could potentially see this old crop corn go positive by May and June, just because of how short the western cattle feeding country is. You get down into Kansas and stuff, and I think we all know how short they were down there 2 years ago. They still haven't recovered. They're bringing train loads of corn in from Illinois. So that tells me there's no corn out here. But yeah, that's as far as the acres go on that increase in corn acres that I think we're going to see. One thing to keep in mind is those are going to be fringe acres. Those are going to be acres that aren't the best acres anyway. So if it remains dry or something on those acres, that's going to drag down that national yield too. So come the end of the month might be the most negative number that we're going to see in the corn market.
So before we wrap this up, I did want to, because we had a great discussion before we even started the program talking about this cattle market. So I'll throw it to you first, David, talking about some maybe disappointed bulls out there, or what are we going to see in this cattle complex?
Well, I don't think that we're necessarily going to see disappointed bulls overall, because of the fact that, like JJ talked about before we went on, a bull market doesn't make new highs every day. And, we've seen some new highs over the week, especially in the back half of the market. What I'm really suspicious of and what I'm really fearful of, I guess, from sitting in my chair, and this kind of goes back to when we were talking about the acreage discussion and, swipe of a pen or what have you. And JJ had mentioned this earlier, what people are paying for these feeders, it just doesn't make sense. Right. And, we're betting on a really big come up in this market, and perhaps we'll get it. I mean, we've really, when I think back to it, we've been kind of betting on this come for the last 2 or 3 or 4 or 5 or 6 or 7 turns, depending on, what your operation is. Everything that you buy is too high, but then everything that you buy is even higher when you go to replace it. And it's all seemed to kind of work itself out, maybe in a couple lulls, but we've had this extraordinarily positive basis market for however long. And, I think that might go away at some point in time, or we might see a dip in it. But my thing is, and I feel like my job is to, work with the cattle feeder or work with the producer and make sure that they're managing their risk however best fit that is. And, I do have some producers that are a little worried about this, and, they're projecting a little bit of a loss overall. So that's my biggest fear. Who knows where this cattle market's going to go. I think, there's some people that, manage money and so on that are going to probably not tell us when the music stops, but when it does, it could be pretty ugly.
JJ, I see you kind of smirking there and shaking your head in agreement there with David.
Oh, I agree totally. Yeah. I mean, prices don't stay at record levels forever, and we're in the risk management business. So our opinions don't really matter. We gotta take care of business and make sure we don't, like David said, if you can maybe get a $50 a head loss, that'd be a heck of a lot better than a $500 a head loss. And I agree. When this party's over, it is going to come crashing down, and everybody's just going to be left scratching our heads.
All right. Well, gentlemen, I really appreciate both of you joining us this week. Want to remind folks that the information on the show is provided for educational purposes and not intended to influence legislation, government policy, or action. And as always, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's another edition of the Nebraska Soybean Board Weekly Market Roundup.